The iShares iBonds December 2023 Term Treasury ETF (IBTD) is a exchange-traded fund (ETF) that aims to provide investors with exposure to the U.S. Treasury market. The fund invests in a portfolio of U.S. Treasury bonds with a maturity date of December 2023. The U.S. Treasury market is considered one of the most stable and secure markets in the world. Treasury bonds are issued by the U.S. government and are considered a low-risk investment. They offer a fixed rate of return and are backed by the full faith and credit of the U.S. government. The IBTD ETF is suitable for investors who are looking for a low-risk investment option with a specific maturity date. The fund provides an easy way for investors to gain exposure to the U.S. Treasury market without having to purchase individual bonds. One of the benefits of investing in the IBTD ETF is the diversification it offers. The fund holds a variety of Treasury bonds with different maturities and interest rates, which helps to spread risk among different securities. This diversification can help to reduce the overall risk of the portfolio. Another benefit of the IBTD ETF is its liquidity. The fund is traded on an exchange, which means that shares can be bought and sold throughout the trading day at the current market price. This can be particularly useful for investors who need to liquidate their position quickly. However, there are also some potential drawbacks to consider when investing in the IBTD ETF. One of the main risks is interest rate risk. When interest rates rise, the value of existing bonds decreases. This means that the value of the IBTD ETF could decrease if interest rates rise. Another risk to consider is credit risk. Treasury bonds are considered a low-risk investment, but there is still a small possibility that the U.S. government may default on its debt. This risk is considered to be very low, but it is still a risk to consider. In summary, the iShares iBonds December 2023 Term Treasury ETF (IBTD) is a low-risk investment option that offers investors exposure to the U.S. Treasury market. The fund is suitable for investors looking for a specific maturity date and who want to diversify their portfolio. However, it also carries some risks, such as interest rate risk and credit risk, and it is important for investors to be aware of these before investing.